Have you ever felt like starting to invest is just too complicated or out of reach? You're not alone. So many people look at the world of investments and think they need thousands of dollars to get started, and that can feel overwhelming. But what if I told you that you could start building wealth with as little as $100? Yep, it's true. With just a small amount of money, you can dive into the world of investing and begin your financial journey. You don't need to be a financial genius, and you certainly don't need a huge budget. The truth is, the easiest way to start investing is simpler than you think, and it all starts with understanding the right steps to take. Imagine this, you're holding $100 in your hands right now, and that $100 could be the very first step toward building a future where money works for you. You don't need to wait until your paycheck gets bigger, and you don't need to know everything about stocks and bonds. What you need is a mindset shift, understanding that with a little research and a plan, you can turn that $100 into something bigger. You see, investing isn't just for the wealthy. It's for anyone who's willing to take control of their finances and learn how to make their money work harder than they do. And here's the best part, you can start without any major risks. In fact, some of the simplest, safest options for investing are available with as little as $100, and they're designed for beginners like you. Whether you're looking to grow your savings, start generating passive income, or simply dip your toes into the world of investments, this is your starting point. So, what's stopping you? Let's explore how you can start investing today, even with a small budget, and set yourself up for financial success. So, stick with me, and by the end of this, you'll have the clarity you need to confidently start investing your $100 and build a solid foundation for your future. Start with fractional shares. When you're just starting to build your investment portfolio, fractional shares are a game changer. Forget the old myth that you need thousands of dollars to get into major companies like Amazon or Tesla. With just $100, you can dive into some of the biggest names in the market. It's like getting a piece of the pie without needing to own the whole thing. Let's say you want to invest in Amazon stock but don't have $3,000 to spare. With fractional shares, you can buy a fraction of a share for as little as $10. This means you can start building your portfolio today, even if your budget is tight. Imagine this, you've got $100, and you decide to buy fractional shares of Tesla and Apple. Over time, as these companies grow, so does your investment. It's not about getting rich overnight, but about starting with what you have and letting compounding do its magic. The cool part? You're not locked into big amounts. Even if you only have $50 to spare, you can still get started and watch it grow. Plus, by diversifying your investments this way, you're reducing the risk spread out over multiple assets instead of putting all your eggs in one basket. If you're thinking about how to get started, look into platforms like Robinhood or Fidelity. These brokers allow you to invest in fractional shares without paying hefty fees. You can invest in individual stocks or even in ETFs, all while keeping your investment affordable. Don't let the idea of needing a lot of money stop you. Take small steps now, and before you know it, you'll see how much $100 can really accomplish in the long run. And here's the best part. By taking this small step, you're starting to shift your mindset. No more thinking investing is for the wealthy. You're proving that you're building wealth, even if it's one fraction at a time. Now that you've got the basics of fractional shares down, let's dive into the next step, how you can use robo-advisors to guide your investments and make things even easier. Curious about how automated investment platforms work? Stick around! Use robo-advisors for low-cost investment guidance. If you're new to investing and don't know where to start, robo-advisors are your best friend. These automated platforms take the guesswork out of investing by helping you build a diversified portfolio based on your risk tolerance and financial goals. With just $100, you can start investing and have your money managed without paying high fees. Robo-advisors like Betterment or Wealthfront analyze your preferences and automatically invest in a mix of assets, like stocks and bonds, that fit your risk level. It's simple, and it doesn't require any advanced knowledge of investing. The best part? Robo-advisors are designed to be affordable. They charge much lower fees compared to traditional financial advisors, which can eat away at your returns. In fact, some robo-advisors even offer basic services for free. So, you're not only saving money on fees, but you're also gaining access to investment strategies that were once only available to people with larger portfolios. Imagine being able to have your money working for you, just like the big investors, but with no complex jargon or high fees to worry about. Now, you might be wondering, how does it all work? Let's say you have $100 to invest. You'd answer a few simple questions about your financial goals, timeline, and risk tolerance. The robo-advisor then uses algorithms to determine the best way to allocate your money. It's like having a personal finance coach available 24/7, guiding you through the investment process without the stress. Over time, the platform automatically rebalances your portfolio, ensuring it stays aligned with your goals. Robo-advisors aren't just for beginners, they're also great for anyone who wants a hands-off approach to investing. By using them, you're not only learning how to invest, but you're also taking steps to build habits around smart money management. And once you see how easy it is to grow your $100, you'll feel more confident in making even larger investments. Ready to explore how you can diversify your investments further? Let's move on to the next step and look at ETFs. Invest in exchange-traded funds, ETFs. If you're looking for a way to make your $100 work harder without diving too deep into individual stocks, exchange-traded funds, ETFs, are a fantastic option. ETFs allow you to invest in a basket of assets, like stocks, bonds, or even commodities, with just one investment. For example, you can invest in an ETF that tracks the S&P 500, which includes 500 of the largest companies in the US. This means your $100 can give you exposure to a wide variety of companies, spreading out your risk and increasing your chances for returns over time. What makes ETFs especially appealing is their low entry cost. You don't need thousands of dollars to start investing in them, and some of the most popular ETFs only require a minimum investment of $50 or $100. So, even with just $100, you can own a piece of a broad range of industries, from tech and healthcare to energy and finance. By investing in ETFs, you're instantly diversifying your portfolio, which is key to minimizing risk and maximizing potential growth. Think about it. Instead of putting all your eggs in one basket by investing in a single stock, you're spreading your investment across a wide range of sectors. Let's say you invest in an ETF that tracks both US and international stocks. While the market in the US might be facing challenges, markets overseas could be booming, which helps balance out your investment. Over time, this balance of assets creates a smoother investment experience and helps you avoid the stress of trying to predict the next big stock move. By adding ETFs to your portfolio, you're laying the foundation for long-term growth. Whether you're saving for retirement, a big purchase, or just looking to build wealth, ETFs are a simple yet powerful tool. Now that you've learned how ETFs can help you grow your money with just $100, let's look at how micro-investing apps can make investing even more accessible. Ready to see how small change can turn into big results? Stay tuned for the next step. Take advantage of micro-investing apps. Micro-investing apps like Acorns and Stash have made it easier than ever to start investing with just a small amount of money. These apps allow you to invest spare change from your everyday purchases by rounding up your transactions to the nearest dollar and automatically investing the difference. For example, if you buy a coffee for $3.50, the app rounds it up to $4 and invests the 50-cent difference. It may seem small, but over time, those small contributions add up and can grow into a substantial investment. The beauty of micro-investing is that you don't need to think about it too much. It's an easy, set-it-and-forget-it method of investing that can fit into anyone's lifestyle. You're already spending money every day, so why not put your spare change to work? With apps like Acorns, you can start investing with as little as $5, making it accessible to almost anyone, even if you're just getting started with finances. Plus, you can choose the level of risk that matches your comfort zone, so you can gradually build your portfolio without stressing over it. These apps also offer automatic portfolio management, similar to what you'd get with robo-advisors. Based on your risk tolerance, the app allocates your money into a diversified portfolio of stocks and bonds. Over time, as you continue to make purchases and round up your change, you'll see your investment grow without much effort. It's a great way to build investing habits without feeling overwhelmed by the process. Plus, it's a low-cost way to start. Acorns, for instance, charges just $1 a month for accounts under $5,000, making it super affordable for small investors. The best part is that you can also link your bank accounts and credit cards to the app, making it even easier to invest without thinking about it. Imagine, you're out buying lunch or grabbing coffee, and every time you swipe your card, your spare change is working hard for you. Micro-investing apps are a simple way to dip your toes into the world of investing, and they can be the first step toward building a more robust portfolio. Ready to see how other alternative investment opportunities can help you grow your wealth? Let's dive into peer-to-peer lending next. Consider peer-to-peer lending. Peer-to-peer lending platforms like Lending Club have opened up a whole new world of investment opportunities. These platforms allow you to lend your $100 to individuals or small businesses, and in return, you receive interest payments. This may sound a bit unconventional compared to traditional investments like stocks or bonds, but peer-to-peer lending can be a great way to generate passive income with a relatively small initial investment. Unlike banks, which charge high fees for loans, peer-to-peer platforms allow you to lend directly to borrowers, often at more competitive rates. The beauty of this investment method is that it's entirely in your hands. You get to choose who you want to lend your money to. Whether it's a personal loan or a business loan, you can review the borrower's profile, their credit history, and even their loan purpose before deciding whether to invest. The best part? You can start with just $25 per loan, so your $100 can be spread across multiple borrowers. This helps diversify your investment and lower your risk. One of the key benefits of peer-to-peer lending is the potential for higher returns compared to more traditional investment options. While stock market returns can be volatile, peer-to-peer lending often provides a more predictable income stream. For example, the average return on Lending Club loans is around 5 to 7% annually, which can be a nice passive income boost if you're looking for consistent growth without much risk. Plus, interest payments are typically made monthly, providing you with a steady stream of cash flow. Of course, as with any investment, there are risks involved. Borrowers may default on their loans, which can result in a loss of your investment. But the beauty of platforms like Lending Club is that they offer credit scoring and risk assessment tools to help you make more informed decisions. With a well-diversified portfolio of loans, you can mitigate some of the risks. If you're ready to see how you can leverage this alternative investment strategy to your advantage, stay tuned for our next step, investing in dividend stocks for some serious passive income. Start with dividend stocks for passive income. Dividend stocks are one of the most powerful ways to generate passive income, and they're an ideal starting point if you're looking to grow your $100 investment over time. These stocks pay out a portion of their earnings to shareholders, typically on a quarterly basis, which means you're getting paid just for holding the stock. If you reinvest those dividends back into more shares, you're accelerating your wealth-building process. It's like earning money while you sleep. One of the best things about dividend stocks is their potential for long-term growth. Even though $100 might not seem like a huge amount to start with, reinvesting dividends can snowball over time. For example, if you invest in a company like Coca-Cola or Johnson & Johnson, both of which have a history of increasing their dividends year after year, you're not just getting paid, you're also benefiting from the power of compounding. Over 10 or 20 years, those small dividend payments add up and significantly increase your wealth. But it's not all about the payout. Investing in dividend stocks also gives you ownership in some of the most reputable companies in the world. Companies with a long track record of paying dividends tend to be more stable and established, meaning they offer a level of security compared to smaller, riskier stocks. When you invest your $100 in a dividend stock, you're not just building passive income, you're also building equity in companies that can withstand market fluctuations. As you start, it's essential to research and choose stocks with a solid dividend history. Companies like Procter & Gamble, AT&T, and PepsiCo are great options because they've consistently paid dividends, even during economic downturns. The key to success here is patience and consistency. You're planting seeds now, and in a few years, those seeds could grow into something that generates income passively. Ready to discover another way to grow your $100? Next, we'll dive into high-interest savings accounts and CDs for a safer route to boosting your cash flow. When you're just starting out, diving into the stock market may feel intimidating. If you're looking for a safer way to grow your $100 without much risk, a high-interest savings account or certificate of deposit, CD, can be a solid choice. While the returns on these options may not be as high as some of the more aggressive investments we've discussed, they come with far less risk, making them ideal for beginners or those looking for a low-risk approach to growing their money. A high-interest savings account allows you to park your money and earn interest over time. Some online banks offer rates that are much higher than traditional brick-and-mortar banks, sometimes as high as 3 to 4% annually. While that may seem low compared to stocks or peer-to-peer lending, it's a guaranteed return. If you invest your $100 in one of these accounts, you can watch your balance grow steadily over time without worrying about market volatility or the risk of losing your money. It's a simple, reliable way to start building your wealth. If you're willing to lock your money away for a little longer, consider a certificate of deposit, CD. With a CD, you agree to keep your money in the account for a set period, like 6 months or 1 year. In exchange, you typically receive a higher interest rate than you would with a regular savings account. For example, a 1-year CD might offer a 5% return. While you won't be able to access your money without a penalty until the term is up, the guaranteed return can be a good option for those who want a safe, predictable investment strategy. These options are particularly attractive if you have a low risk tolerance or are just starting your financial journey. You may not make a ton of money in the short term, but by consistently saving and reinvesting the interest, your wealth will slowly grow. And remember, this is just the beginning. The real magic happens when you combine low-risk options like this with higher-risk investments, creating a diversified portfolio that balances risk and reward. Up next, we'll explore how you can use this strategy to build wealth over time. When you're just starting out, diving into the stock market may feel intimidating. If you're looking for a safer way to grow your $100 without much risk, a high-interest savings account or certificate of deposit, CD, can be a solid choice. While the returns on these options may not be as high as some of the more aggressive investments we've discussed, they come with far less risk, making them ideal for beginners or those looking for a low-risk approach to growing their money. A high-interest savings account allows you to park your money and earn interest over time. Some online banks offer rates that are much higher than traditional brick-and-mortar banks, sometimes as high as 3 to 4% annually. While that may seem low compared to stocks or peer-to-peer lending, it's a guaranteed return. If you invest your $100 in one of these accounts, you can watch your balance grow steadily over time without worrying about market volatility or the risk of losing your money. It's a simple, reliable way to start building your wealth. If you're willing to lock your money away for a little longer, consider a certificate of deposit, CD. With a CD, you agree to keep your money in the account for a set period, like 6 months or 1 year. In exchange, you typically receive a higher interest rate than you would with a regular savings account. For example, a 1-year CD might offer a 5% return. While you won't be able to access your money without a penalty until the term is up, the guaranteed return can be a good option for those who want a safe, predictable investment strategy. These options are particularly attractive if you have a low risk tolerance or are just starting your financial journey. You may not make a ton of money in the short term, but by consistently saving and reinvesting the interest, your wealth will slowly grow. And remember, this is just the beginning. The real magic happens when you combine low-risk options like this with higher-risk investments, creating a diversified portfolio that balances risk and reward. Up next, we'll explore how you can use this strategy to build wealth over time. So, now that you've learned how easy it is to start investing with just $100, it's time to take action. You've seen that with the right mindset, you can kick off your journey toward financial freedom, no matter where you're starting from. The steps are simple, but they require commitment. Starting small doesn't mean you can't achieve big things. It just means you're smart enough to get your foot in the door while learning the ropes. Remember how overwhelming it once felt to figure out where to start? Now, you have the tools, the mindset, and the steps to make that $100 grow. You've taken the first step toward building wealth, and with consistency and patience, you'll see the fruits of your efforts. Now, here's the next move. Hit that subscribe button and turn on notifications so you don't miss out on more powerful tips and strategies to supercharge your financial future. Trust me, you're just getting started. And if you're ready to take things to the next level, I've got something for you. Click the link in the pinned comment now and start transforming your finances today. It's your time. You'll learn exactly how to build passive income streams, eliminate debt, and maintain mental clarity under financial pressure, all while balancing your personal well-being. Don't wait for the perfect moment. Take action now and start investing in both your future and your health. Check out the material in the pinned comment for everything you need to start your journey toward financial success and holistic health.